back to the channel, guys. On today's video, we're going to be talking about my favorite topic, and that is the Canadian financial stocks. We're going to be focusing on the big five Canadian banks. We're going to talk about how well they've done year to date. Today is January 17th, 2022, and so far in this year, the Canadian banks are outperforming the market huge. I want to touch on why that is specifically, and I want to talk about where they're going to go for the rest of the year. But first, I want to take a look at how well each of the big five has done year to date. The top performing bank, not to my surprise, is the Canadian Imperial Bank of Commerce, and they're up 10.99% so far this year, followed by the Royal Bank, which is up 9%, and then BMO, which is up 6.22%. Toronto Dominion is up 4.83%, and the Bank of Nova Scotia is coming in on last place. It's only up 2.74%. However, this is, it's only been 17 days in 2022, guys. Even being up 2.7% is impressive. Anybody watching these videos know a big part of the share price increase is due to the banks announcing dividend increases and share buybacks at the end of 2021. Now, they were announced at the end of 2021, but they don't actually take effect until the next payment dates, which are in 2022. So now is when the dividends actually go up, and now is when the buybacks of the shares happen. Speaking of the buybacks, it's really, really great for these banks because it brings their earnings per share up. They are pushing their share prices up as well by taking shares off of the open market. But this is all pretty obvious things. This is surface level knowledge. I want to get into a couple other factors of why the banks are going up. The main reason the banks are all going up right now is because the Bank of Canada. Everyone is assuming that the Bank of Canada is going to raise the interest rates on the next policy meeting, which is January 26th. So that's very, very soon, and the market isn't anticipating a raise, which would mean very good things for the banks because they get more margin on all their loans. Over on the American side, the Fed has made it clear that they're going to be raising rates at least 4 times. That's the guidance that we've received. That's what's been interpreted so far. So Canada tends to follow America in these types of things. So if America is going to raise 4 times, Canada is very, very likely to raise 4 times, and that would be a full 1% interest point on all of the bank's loans, and they can increase their margins. They make a lot more money. The Canadian banks have never been so profitable. It's currently a very low interest rate environment, and the banks are putting out billions and billions in profit. They've never made this much money. If they make this much money in a low interest rate environment, what are they going to do in a high interest rate environment? So if interest rates raise 1%, the banks are going to absolutely crush it. Investors see this, they know it's coming, and they want to put their money in right now. We're seeing a rotation from tech stocks into value stocks, into sure bets, into the Canadian banking system. I just want to make a little note here though, guys. If the Bank of Canada does not raise interest rates on January 26th, then these gains are going to melt down a little bit. We're going to see some red days. I don't know how far it'll drop because the next quarter, I would say there's a 100% chance of interest rates rising, but I'm just going to throw it out there. So if some of you want to wait and see what happens before you buy, there's a chance that the rates don't raise and that the banks will come down a bit and you can jump in and buy some. But I don't know, guys. I think the rates are going to raise, but nobody knows for sure. Another reason for the increase in share price is all the money that the Canadian banks have available to spend on acquisitions. We just saw BMO make the biggest acquisition in Canadian bank history, buying the Bank of the West. This just made BMO a huge player, and now they have a great presence in America, and that could be good or bad, okay? It could be a great growth factor going forward if everything is executed and integrated correctly. Kudos for what they're doing, for taking a chance and investing in America. I like that from BMO, but all the banks have enough money to make major acquisitions right now. And actually, the CEO of TD Bank, an absolute great bank, just came out and said that they're looking actively to make a huge acquisition. But he did say if they cannot find something that's worthy of the investment, that they're going to make even more share buybacks. Okay, so if they get an acquisition, the share price might drop initially, depending on the market's interpretation, but eventually I have faith that management knows what they're doing and they're going to make a ton more money in the future because they tend to make great investments only. However, like I said, if it doesn't happen and TD just buys back more of its own shares, more than they initially announced last year, then this thing's going to be flying up even further. By the end of this year, everyone, the banks will be higher than they are today. I can almost guarantee you that. I'm going to be buying some more. I have some money coming in. I'm probably going to sell a rental unit that I have right now, and I'm going to take that money and put a good chunk of it into the Canadian banks. We're going to see which one is undervalued at the time. I'll keep you guys updated, but I'm still very bullish on the banks. It's still a buy for me. Let me know what you guys think. I am curious to know though, does anyone not like the banks right now? Does anyone think they're not a good investment? I'd be really interested in hearing why that would be. But I'm all ears. I'm open to different opinions. Thanks for watching, guys. We'll see you on the next video.